FedEx yet again cutting its full year forecast. Economic uncertainty, of course, worsening demand. And there are other threats. Remember, the Trump administration is moving ahead with increasing or putting duties on small packages from abroad, removing that so-called de minimis exemption. We're joined now by Jason Seidl, senior research analyst at Cowen. Jason, what's the underlying problem at FedEx? Is it possible to single out any one thing?
I think there's a few things going on, and nice to be here again, Andrew. Number one, we've seen a softness in the B2B marketplace, which isn't helping them, and we're seeing continued weakness on the industrial side. I think with all the noise around tariffs, that's created a good deal amount of uncertainty in the marketplace with shippers, and that's also not a good thing. So, you have weakness and uncertainty, not a good 1-2 punch.
Are these FedEx-specific problems? Is UPS having the same kind of troubles?
I think you're going to see this across the transportation landscape as the earnings come through later in April. Remember, FedEx is more of an out-of-cycle reporter. And I don't think anybody's going to be able to fully escape it. Pricing for the most part is still hanging in there, but that's something that bears watching as we move throughout 2025 here. But no one in the transportation space is going to be able to escape a soft macro.
So rerouting, if the company's forced to do that, I mean, this thing, it's a kind of a daily miracle, the amount of stuff they move every day, tens of thousands of employees. But if they have to reroute stuff, that would be a huge and complex undertaking.
Well, you talked about de minimis, and they're really only exposed about 2.5% to any given country. De minimis has been put on hold for a little bit, so we think it'll ultimately happen, and then we think de minimis will actually probably be forced to reconfigure supply chain, taking a lot out of the air cargo space, which has really been more pushed on the total leasing side. And then pushing some of that stuff onto the water, and then subsequently changing some of the supply chain and probably increasing demand for warehousing going forward.
You still have a buy on FedEx, though. You do see, you reckon, I guess the market has been a bit too tough on the stock?
We're trying to look through the near term. It's extremely messy near term, and let me be very clear about this. Uncertainty is king, and at the worst, it's going to continue to put pressure in the near term. At best, it's going to put a lid on the stock, right? But when you look out and you look what FedEx is doing, right? They have a drive program for cost-saving initiatives. They just did about $600 million in the quarter. That's probably going to total about $2.2 billion here in 2025. They have Network 2.0, which they're finally combining both their ground and their express networks where it makes sense. I think this is long overdue. That's probably another $2 billion of cost savings for these guys. That's probably going to really hit fiscal 27 more so than anywhere else. And they're spinning off their freight division. So there's things going on at FedEx that are idiosyncratic over the longer term that we think longer term investors will enjoy. In the near term, it's going to be ugly for transports.
Is this a very capital intensive business? I guess it is. I mean, you've got this huge fleet of aircraft and trucks and distribution centers, and they do need to be renewed.
Absolutely. It's transport, unless you are a non-asset-based logistics company, is a capital-intensive venture, and you're requiring CapEx on an annualized basis.
So, that's a head. Well, I guess they're happy to see bond yields come down. I mean, do they need to borrow money, or have they got a clean balance sheet?
Well, FedEx is doing pretty well, and they've been with excess free cash flow. They've been buying back stock, and it's going to be interesting to see the track they take to that as they just are getting through the rest of their buyback with the pressure on the shares today. I think what you'll see from a lot of transportation companies that are still generating cash is probably a move to increase the buybacks.
Right. And generally, Jason, is it, I mean, we always hear it's a bellwether for the economy. Generally, does FedEx and similar companies, do they tend to underperform in recessions?
Yeah, I mean, I think the whole group underperforms. As I was telling somebody earlier today, there's nowhere to hide in the transportation space, right? You're still going to get hurt. It's just a matter of, are there places you can get hurt less? And I think there are, and I think some of those are in the rail space.
where would you say could be relatively immune in transport right now?
Yeah, and I think that's a good term, relatively immune. I think the railroads are probably relatively immune, going to get hit, but not as bad. Somebody like UNP right now, we think is sort of probably the nicest house on the worst street.
Okay, Union Pacific, yeah. Thank you very much indeed, Jason. Really appreciate it.
My pleasure.
Jason.